Good afternoon, everybody. Andy Petraza here with Special Effects Academy, and we are starting on our Forex Weekly Outlook for May 6, 2018. Take a quick look at the week that just ended, as well as a look at the week ahead. Our contents for tonight are going to be the currency strength meter, the fundamental announcements that we have for the week, a look at the charts for the major pairs on the daily time frame, look for any setups that we have in progress, and a few parting words as well as a Q&A. And again, thank you for joining. We'll start out with the relative strength meter. What you're seeing on the screen on the left-hand side is the week prior to last. And we see that we had a nice bit of volatility, 3.54% move in the market. The week prior to that one, so 3 weeks ago, was actually higher, it topped 5%. So we see volatility returning to a market, which is a good thing for us. The more volatility grows, the more pips we can capture, hopefully safely. And last week, we did have a bit of a drop. Almost 2% volatility, but the key thing is for the month, April had probably the highest volatility we've seen since January. So volatility definitely returning to the market, even though last week was a bit of a drop compared to the prior 2 weeks. What we can see in last week is that the Australian dollar continued being around the middle of the pack. So it didn't appreciate against the main currency, being the dollar, but it did beat the Kiwi, the Swiss, the Euro, and the Pound. The Canadian also had a bad week against the dollar and the yen, appreciated against everybody else. So middle of the pack. The Swiss had a very, very bad week. So the Swiss did drop in value against pretty much everybody except the Euro and the Pound. And in general, we can see that the European currencies were the hardest hit. We see the Euro and the Pound both being the big losers for the week. The Japanese yen appreciated against everybody else except for the dollar. The Kiwis was also pretty middle of the pack. The dollar, the clear winner, appreciated against everybody else. I always keep silver and gold on the chart just as a little bit of a bellwether kind of thing to see what the bullion is doing, but don't pay too much attention to that. It's more of a visual alert for me to see what the metals are doing for the week. So anyway, we have the European currencies having been the clear losers: the Swiss, the Euro, and the Pound, and the yen and the dollar, the two that appreciated the most. Looking at the fundamental announcements that we have for the week to come, we have, starting tonight at about 7, almost 8 o'clock my time, we have monetary policy meetings from the Bank of Japan, and we'll have a repeat of that tomorrow night. So it's 2 nights of press release or meeting minutes being released by the BOJ. These are sometimes interesting. They tend to give a little bit of insight into what the Bank of Japan is planning on doing, and especially important because the yen is the safe haven currency for the Europeans. And we can see that play out last week, as we saw in the relative strength meter, that the European currencies crashed, and at the same time, the yen had a really good week. That is the clear explanation of why that happened. As uncertainty grows in Europe, all that money tends to start moving into Japanese yen. That is their safe haven. So the yen tends to do well when the European currencies don't. And that is something very important when we're trading. If we see that uncertainty in Europe, that's our signal to start looking at the yen a little bit as their safe haven and assume that it's going to get stronger, and vice versa. European currencies getting stronger, the yen tends to either hang out flat or get a little bit weaker. On Wednesday, we have the New Zealand interest rate decision. I'm not paying too much attention to the Kiwi this week, or haven't been for the past few weeks either. I may open up the trading room for that decision, but I don't expect anything major to happen. Still, it's 5 p.m. my time, so I might as well be there. So we'll play that one by ear. I'll call that one on Tuesday, and I'll let everybody know if we'll open the trading room for that. More importantly, on Thursday at 7 a.m. my time, we have all these high impact announcements coming out of the United Kingdom, including the interest rate decision, which is the key one. They're currently at 0.5 percentage point as the interest rate. And it looks like the market is forecasting an increase of 0.25 point. This is going to be key. If this one fails to happen with the market already factoring it in, the pound is probably going to take an even bigger hit than it has for the past couple of weeks. So that's 7 a.m. my time. This one, I'm definitely going to be up and trading it live. So it's a little bit early, especially for some of you folks not in my time zone. Either Mountain Time or Pacific Time. But I will be opening the room up around 6:30 a.m. and look to see if there's any good pound trades. We can see that last time that they had an interest rate decision, the United Kingdom does publish their votes. We had 7 of the governors of the Bank of England voting for no change, 0 voting for a cut, and 2 of them voting for a rate hike. This has been growing. It was usually unanimous that it remained unchanged. So we have the 2 governors voting for a hike, and the market itself expecting a 0.25 point increase this time around. And of course, they will release their minutes of the meeting and of their, at the same time, release the interest rate decision. We have a few more fundamental announcements that didn't fit into this screen, so I'm going to be moving on to a second screen. So we covered up through the Bank of England minutes. We also have the CPI year over year for the United States, excluding food. So everything in the consumable basket except for food is going to be coming out that same morning at 8:30 a.m. These are normally non-starters. They don't tend to move the market much, but the last few CPIs have actually had a huge impact. And since I'm already going to be up that early for the Bank of England, I'll likely be taking a close look at the CPI as well. The previous was 2.1%, which is a pretty good match for the target inflation in the US of exactly 2%. So this was pretty much an expected result. We'll see what the new one ends up being. And last but not least, on Friday morning, 8:30 a.m. Eastern Time, we have the unemployment rate and the net change in employment coming out of Canada. And that is going to be it for the fundamentals. If you ever need to see what's on the calendar, you can go to our website, specialeffectsacademy.com, fundamental announcements, or you will see that link on the sidebar towards the right-hand side as you scroll down in the webpage. And now I'm going to start with a look at the actual charts. Does anybody have any comments or questions before I move ahead? Do feel free to unmute yourselves and chime in if you have anything. Okay. Then on that note, I will carry on. We are looking at the euro dollar. Again, all of the charts we're going to be looking at on the weekends are going to be daily charts. During the week when trading, I'm usually going to be looking at the hourly charts to look for entry signals or any good trades, but the pre-scan is always going to look at the longer term charts. So we can see on this chart that the euro has been strengthening against the dollar consistently for more than a year. So the chart starts in June of last year, but even before that, we had it coming from the bottom. It has been following a trend line, moving away from the trend line and back consistently, as I said, for at least a year, and has now finally broken through that trend line. I've been shorting the euro dollar for the last week or so, and as you can see from this chart, it's been a good couple of weeks. These are all daily candles. So I've been taking profit as it goes down, and I am still short in the long-term trade. I'll be waiting to see how the week opens, which it will in about an hour. The market kicks off, but likely it'll take until tomorrow at the same time for the market to really pick a direction. My expectation, however, is that this will continue dropping, and the likely stopping point is this next trend line on the way down around the 117 area. It's currently about 250 pips above that, so it still has a ways to drop before it gets to that level. Now, that's my expectation. I don't predict. Nobody can predict what the market is going to do. We can only read the technicals in the chart and get a little bit of insight of what might be likely. I will still be trading based on what the market is actually doing and not on my predictions, which again are completely meaningless and don't pay attention to them. But we will. I guess the insight is going to give us at least some better odds. I'm more likely to be shorting this pair than I am to go long. However, if I get a long signal, I will happily take it just as easily as I will a short. Moving on to the next chart, the pound dollar. And we see the same thing happening as we saw in the relative strength index. The European currencies were hard hit last week and even the week before. The pound is the same. It did top out a couple of weeks back at 143, 143.50 really, and that was a point it had reached prior to that around the beginning of the year, as we can see here on the chart. So it failed to pierce that high, and it has been dropping consistently for the last 2 weeks. This one has now actually hit the upper side of a descending trend line and bounced off of it on Friday. So we'll see what the market continues doing. This is another pair that I am short on. I have been shorting for the last week or so. I'm still in this trade, carrying some profit. I will assess this in the next 24 hours to see if I want to continue trading it down towards the 130 or the 133. Either one of these trend lines will be a nice point of support for the pound dollar. So right now it is looking like a short. USDJPY, and again, regarding the yen itself, it is the safe haven currency for Europe. We can see that it has been weakening against the dollar. The dollar has been having a really good run for the past couple of weeks. So you'll see that the USDJPY has gone into JPY weakness, but it's really not JPY weakness. It's more dollar strength than anything else. And we did have a little bit of a retrace on Thursday and Friday. So you see that the last two candles are bearish. It's still following that rather steep trend line, and I would expect it to continue heading towards the top, looking for, if you can see, there's a sort of channel from these two parallel trend lines. So it's a target, or my target for it is probably around the 111 to 111.50 around the top here, assuming it does pierce this trend line where it bounced off of on Wednesday. So we'll take a look at the first day of the market to see what the direction is. Alternately, if this one decides to drop, and I do expect long-term to see Japanese strength against the dollar and everybody else, it should be trying to head back down to 100, which is the normal support or stopping point for the yen against the dollar. But right now, definitely in bullish mode. This pair wants to go up, and I'll be looking for those opportunities as the week starts. USD Canadian. The USD Canadian has been all over the place. It weakens, it strengthens, it weakens, it strengthens. It really hasn't picked a direction consistently since around the middle of last year, when it had a really, really nice run. It strengthened all the way down to 120 against the dollar. That's the lowest point on this chart, and that was around September of last year. Since then, it has been trending towards Canadian weakness while having some very nice rallies back into Canadian strength. It is making, however, higher lows and higher highs every time. Likely the next run will be towards the 133, trying to make yet another higher high, but it's become very unpredictable. So I've been trading the Canadian very carefully because it tends to reverse without warning, and it does have these very wild swings, which are good when you're trading, but really not good if you get caught on the wrong side of one. So I'll take this one under advisement. If I see any good entries in the short term on the USDCAD, I will take them. But for longer term trading, I'm not paying as much attention to this one as I usually do. USD Swiss, this was my hero of last week. I still have an open trade on this one carrying more than 200 pips. Definitely making a nice rally. When it crossed this trend line in the middle, I started going long on it and adding to those positions. My target, which I mentioned on one of these calls, I forget 2 weeks or 3 weeks ago, was for it to hit parity with the dollar. So parity being 1-to-1 against the dollar. It actually reached that on Friday. So Friday, it finally crossed over into 1-to-1 against the dollar, reached parity, bounced off of it. It is still trading slightly above parity as of the close of last week. We'll see what it does on the open tonight. The normal place for it to find massive resistance on its way up is 103. So we still have about 300 pips to go till it reaches that that level. Not sure that it's going to do it this time. It's also at a point where it has stopped in the past. In October, it also reached parity and bounced back. It didn't go any higher. But historically, it's gone as far as 103. And if it does try to do a run, that is 300 pips, I would dearly love to capture. So I'm still in this trade. I'm still long, but I'm keeping a very close eye on it. I have tightened stops. So if it starts going back towards the prior trend line, the top of this channel, I will by then have long since gotten out with profit. But this one is still going to be high on my radar for the week. Again, guys, feel free to interrupt at any point if you want to ask any question about a specific chart or some of what I'm saying. Moving on to the Aussie dollar, I did have a lot of hopes for the Aussie about a month ago. Those have since been completely dashed. So I was expecting it to head back towards the top of the chart. And this was on any one of these rallies that it has had, but they have just simply not fulfilled. The Aussie continues trading into weakness against pretty much every other currency pair. I think the only one where it had a nice showing last week was against the Canadian dollar. But against the US dollar, it's just continuing to go towards the bottom. It is at a point of support around the 0.75 to 0.74 area where it is right now. Not sure what it's going to end up doing. I would definitely still like to trade it up if it gives me the opportunity, but I'll be doing it very, very conservatively and waiting for it to give me a good signal before I jump into anything with the Aussie dollar. So not on my radar, I guess is what I'm trying to say. But I will be taking a look at it at least once a day to see what it's doing. The Kiwi dollar, much the same. It had been trading very sideways for a long time since the end of last year. It entered into a little bit of a sideways channel, a wide one, but still a sideways channel. In the last week or so, it did break out of the bottom of that channel, went into massive dollar strength, as did most of the other currencies, has found a new bottom around the 0.70 area and is now trading a few pips above that. So we'll see if it has enough, if the dollar has enough strength to continue driving this one towards the bottom of the chart at the 0.68. This is not a pair I'm actively trading right now, but if I see a good opportunity, as usual, I will take it. The Aussie Canadian, as I said, this is the one pair where the Aussie had a halfway decent week. It actually recovered quite nicely as of Tuesday, Wednesday, Thursday, Friday. It went back into Australian strength against the Canadian. Not significantly. The trend is still massively bearish, but at least it had a bit of a recovery towards the latter half of the week. Definitely, we see that point of support here at the 0.96, which is this bottom trend line. And this is one that I may take a look at throughout the week with a little bit more consistency, because this show of strength against the Canadian may mean that if anything happens to the Canadian, this one may just simply shoot up. And I would like to catch one of those moves. So I'll be looking at this one a little bit more closely as the week advances. I rarely open any trades on Sunday itself on the market open, but on the noon session tomorrow, this one may be one of those that I see what it's been doing for the past 12 or 14 hours. And if it looks good for a long on the hourly chart, I will probably take it. I would not enter a short until it breaches below the 0.96, where we have this level of support here at the bottom. But for a long trade, I would likely take that without too many second thoughts. Euro Swiss has been trending up nicely, and we can see that trend line of Euro strength coming in from about a year back through today. It did go into a sideways pattern, which has been locked into for the past couple of weeks. We took some nice profit out of it, but they have been shorter moves. So I think we took 50 pips at a time profit at least twice last week on the Euro Swiss in short-term trading. When they're moving in these sideways patterns, they tend to be very predictable for channel bounces, but it's never a massive amount of pips. So last week was definitely scalpers heaven. I think all my trades had a target of 50 pips, and there were only, I think, 2 of them that took me out at a loss. All the other trades, 15 total trades. You'll have to check my end of the week summary from Friday. But out of the 15 trades, I think 4 of them were losers, and only 2 of the losers were from last week. The other ones were from the week prior, or even further back, that finally took me out at a stop. But the rest of the trades captured their target. And as I said, virtually every single trade I opened last week was looking for only 50 pips, definitely a scalper's methodology. And I trade based on what the market is doing. I really don't like scalping. That's not my forte or my preference. But if that's what the market is doing, then I will happily take 50 pips at a time every time they're presented to me. The Euro Swiss was a great one last week. We'll see what it does this week that's opening right now. Euro Pound. The Euro Pound is another currency pair that is trapped inside a sideways channel, albeit a nicely wide one. We've got 300 or so pips between the channel top and bottom. It did break out of the bottom of the channel very briefly a couple of weeks back, maybe 3 weeks ago, and has since returned to the channel and is making its way back towards the top. I still expect the pound to be stronger than the euro for the long term, so I would not surprise me to see this one going back towards the bottom. But that will I will wait on a proper signal for that. As you can see from all the little arrows on this chart, I heavily trade the euro pound. But I look for good entries, and this one I have traded for about 100 to 200 pips at a time. Right now, I would definitely be long if I entered, but there's not as much profit available from where it is right now to the top of the channel. So I'd be more likely waiting for either a bounce off one of these trend lines and a trip back towards the bottom, or for it to actually reach the top, make its U-turn, and do another trip on the channel. So on my radar, but I probably would not expect to be trading it early this week. If anything, it will be towards the end of the week when we have the or when we have the interest rate decision that's coming out on Wednesday, or whenever I said it was coming out, or towards the end of the week once it stabilizes, likely maybe even further in the future. EURJPY, and here you can see what I was mentioning about the yen being the safe haven currency. When the euro started running into trouble sometime the week before, the yen started strengthening against the euro. And for the last week and a half, it's been a steady drop and has given about 300 pips. This is another pair that I trade. I actually lost a trade on this one. I had it as my hedge, and as a hedge, it worked wonderfully. It took me out at a loss, but all the other trades that I have on the long-term account worked in the opposite direction, and they're currently at profit. So it was a little bit of a calculated risk, as all hedges are, and it did go as expected, as I suspected it would, into Japanese strength against the European currencies, and I got taken out somewhere along the way. It still looks like it's going to continue dropping. So I'll reassess this one when we have enough data from the beginning of the week, so sometime tomorrow, and see if I want to try and trade it further down towards one of the levels of support that we have at the 129.50, the 127.50, and the 126. So there's a nice bit of pips, hundreds of pips here to be captured if we continue seeing the Europeans have trouble and the yen as their safe haven start doing very well against them. Euro Canadian, and this is one of the few pairs where the Canadian actually did well. We can see that the euro had massive issues for the last week, 2 weeks, and it even had them against the Canadian, which has been weakening along with everybody else. We can see that the Canadian weakness, we can see here at the bottom, the Canadian at its strongest, and since September, it has been steadily rising into Canadian weakness, euro strength, finally topping out at 161. And then since the beginning of March, we have it consistently going into Canadian strength, which is really euro weakness. The Canadian has not been consistently strengthening for quite a while. Pound JPY, nothing much to see here that I haven't said. The yen is the safe haven for Europe. The pound is having a terrible time. The yen is getting stronger against the pound. We can see that sideways channel that the GBPJPY has been traveling in. It did reach the top a few weeks back, has now gone to the very bottom of the channel. If it does pierce both the channel as well as this trend line we have right below current price action, then it could easily continue heading down towards 144, 143, 139. So this is another one that is high on my radar for the week, based on the fact that I like the options on both the pound and the yen, and especially for a continuation of this drop. If I see this one start breaking the channel bottom and the trend line, I'll likely enter a long-term trade trying to capture as many of these pips as I can. So this one should be on your radar as well. Aussie JPY, again, the Australian has been a huge disappointment. I expected it to go into strength from quite a while back. It has tried. It's definitely recovered somewhat from the very bottom of the chart against the yen, but the last couple of weeks have again gone into Australian weakness or yen strength. And we're currently at that trend line that it had established all the way back here. It is testing that trend line. It failed to pierce it consistently. It's riding right at the trend line itself. We'll see if it continues making its way slowly up, or if this is going to be a true trend line break, in which case it will likely make another trip towards the bottom. And I will trade it in that direction if I get a signal. For now, I'm going to be waiting for a lot more indication of strength before I re-enter this one towards the top of the chart. So now we're getting to some of the more arcane currency pairs. The Euro New Zealand is another pair that is trading very sideways, and it's one of the few where, despite the problems with the euro, this pair actually went into euro strength. So from around what is this, the end of March, it has been moving favorable to the euro, unfavorable to the Kiwi, except for the very last week where we had a little bit of a Kiwi recovery, but it never managed to make a show of strength. It's just hovering around the top of the prior range. And I've not been trading this one. We'll see if it tries to make a run for the top. I would likely wait for this one to reach the top of the chart again, so around the 174, which seems to be the current level of resistance, and then trade it down. I really don't believe that this one can go up a whole lot more. The Kiwi is not. It is probably at the limit of its weakness, and the euro, I think, is at the limit of its strength where it is. So the euro should be continuing to go down for a while, and I don't think the Kiwi has much more ground to give. So likely I would like to trade this one towards the bottom on a long-term trade. That would be around the 155 area as the target. And that, my friends, is a huge, massive amount of pips. It's currently trading at 170. So we have about 1,500 pips between where it is right now and where I would expect it to head. So I'll be looking at this one closely, but I need a really good signal to start trading it. And I would prefer for it to go higher before it breaks and I trade it back towards the bottom, just because I'm greedy. Plus, it makes better sense as regards risk management. Pound Canadian, and I think we're getting to the end of our pairs to review. The Canadian, this is another one of those pairs where the Canadian actually strengthened based on the fact that both European currencies, the euro and the pound, are doing terribly these last few weeks. So we see that it has gone back to test a prior level of support resistance, probably one of the better pairs where the Canadian actually had a good showing. And it is now at that prior level of support resistance. This is another key one that I'll be looking at the start of the week to see what it's going to bring. And I think this brings us to the end. Yes, it does. So that is the end of our pairs. As the setups in progress, this is a little bit of a summary, a cheat sheet I do after looking at all those charts. So these are the 5 currencies that I will likely focus on. The dollar, of course, the dollar pairs have been extremely strong for the past 2+ weeks. And I will continue trading dollar strength. All my open trades right now are on dollar strength. But at the same time, I'm ready for a reversal at any point. I do not trust the dollar long term. But I will continue to trade whatever it's doing at the current time. And right now, the dollar is definitely bullish. Euro pairs, the euro is in a retreat. It has been retreating for a few weeks, but that as well looks shaky. So I'm going to be waiting on the first day or so of trading to assess the weekly direction before I jump into any euro pairs, into any euro trades. Pound pairs. I said it, I showed it, the pound has been slaughtered these last couple of weeks, and I don't think that can continue for long. Long term, I am very bullish on the pound. I expect it to get to about $1.50 on the pound dollar, so 1.5, and it's currently at 1.30 something. So there is a nice amount of pips to be made there, but it has had a really terrible 2 or 3 weeks. So until a good signal comes, I'm going to continue to trade the pound weakness simply because that's what it's doing. But I am also getting ready. I have all my, I guess, all my gear packed and ready for a trip back towards pound strength. And let's not forget, they have that interest rate decision this week where the market is expecting an increase of 1/4 of a point. If that increase comes in higher than that, if they go to 1/2 point, or alternately, if they decide not to change the rate, that's going to send another shock wave into the pound pairs. That's going to be at 7 a.m., whichever morning I said it was, and I will definitely be trading that one live. The Canadian pairs, so the loonie has been in a yo-yo mode. I showed that in the main chart, the USDCAD. It's just been bouncing up and down. It has no direction other than that it's going to be bouncy. And I will be trading that one depending on the pair and whichever direction it's going in the short term. I'll likely not be looking at any long-term trades on the Canadian just yet. Last but not least, the JPY pairs. The yen continues to bounce because money is pouring in and out of it based on the fact that it is a safe haven currency for half the planet, mainly for the Europeans. Another good pair to trade in whichever direction it's going at the time. So each JPY pair is going to be different. The JPY is going down against the dollar, so USDJPY is heading up, whereas the JPY is going up against the European, so those charts are heading in the direction of Japanese strength. You cannot trade the JPY on its own. You always need to figure out who it's trading against and play that chart specifically. Unlike the US dollar, which right now you can safely go long on the dollar no matter what pair we're talking about. So each one of these has to be treated very independently. And that's my outlook for the week. Again, no predictions, just my my bias and a little bit of insight as to which way the market is probably going to jump. I won't make any actual trading decisions until I see something happening in the charts. And right at the end, and I mentioned this at the beginning, volatility. April had some really nice volatility returning to the market. The year, my trading year, I go by fiscal year. Business corporation year starts in April. So April was my first month of the fiscal year, and that's how most companies do it in the US. So this year, this fiscal year seems to be getting off to a good start, in line with the cycles that we've come to expect from the market. So April is usually a very nice pickup, and we start seeing the direction that the market is going to take for most of the remainder of the year. I'm going to be starting to look out, and I already did the last couple of weeks. I started opening some longer term trades, but this is when these longer term entries start signaling as the yearly direction gets established. But it's too early. We have to be cautious. It's still too early in the season to definitely say it's going in one direction or the other. So I'll be looking for those entries, but I wouldn't be surprised if I don't find them for another month or so. It'll still be short-term trading will be the our bread and butter for the time being. So we're going to be opening the shorter term trades, but don't be afraid if the market starts going into these longer moves. I will not be objecting that some of these short-term trades may end up becoming longer term. I'll simply move my limits and let them continue going as far as they want to go. So there's going to be uncertainty by the bucket load, which means volatility, and which means in turn lots of good movement in the Forex. There's a Chinese curse that is popularized in a lot of literature here in the West, and that's when they say, may you live in interesting times. And that's supposed to be because people like to live in calm and peace, and interesting times usually means a lot of chaos. That's not a curse to a Forex trader. We thrive in interesting times. So I hope that we are starting to go into the interesting times right now. And that is the end of my spiel for today. So I'll leave it at that. And now anybody that has any questions, any comments, anything at all, feel free to unmute yourself and hit me with it. And I see that I have a lot of new joiners today, as well as my my regular folks. So hey, Jerome. Hey, Miguel. I think this is your first time with us. Diane, also first time. Thank you for joining. And John, you've got a resident poet from Cambridge. Welcome aboard.
Well, this is Diane, and I just want to say I'm so excited. I think that I just joined, and I'm just so excited. that it's not just the trend is your friend, but I like to hear you talk about reversals because that's what I like. But you're so professional, and I just really am so happy to be working with you.
Oh, thank you so much. That is really, really kind of you, and likewise, I'm happy to be working with you. And yeah, I'm not tied to anything, so definitely the trend is your friend. You'll hear me say that a lot. But when there is a reversal, I'm not going to stick to my guns and continue trading in the opposite direction. You got to trade whatever the market's giving you.
Yeah, well, I like the support, so thank you for accepting me.
No worries. Thank you for being here. Thanks a lot, Diane. Anybody else? Okay, then I'm going to wish you a good evening, a good morning. I know all you folks are all over the world right now. I think the furthest away we have is somebody in Greece. How is Greece today or tonight? The
Greece
weather
is
good?
fine. Absolutely.
Excellent. Excellent. I haven't been in the Mediterranean in quite a while. I need to fix that.
Well, I told you you're welcome. What you're absolutely welcome here. So who are the regulars? Who are the usual suspects in the Forex?
Well, we have my partner in crime here, Callum. He's in Thailand, and he's on vacation. He's on vacation until the middle of this week, so he's not here. But I usually get Joseph. Joseph have been with us for a bit more than a month. But my really regulars are not here today for whatever reason. So I'm missing a few of them. But I do have some old friends joining, including my friend Jerome. He's in Colorado, so he's a couple of hours in time zone ahead of me there.
And it's always such a pain to wake up in the morning and trade with this guy, I'll tell you.
Yeah, we've had some really fun middle of the night or early morning trading. And Jerome actually visited me here for about a week, and we were getting up at all hours of the night to have fun with the market. Okay, guys, on that note, I do wish you a pleasant whatever time it is in your zone, and I will be opening this up again tomorrow at noon Eastern time in the US for our first trading session of the week. Not sure if there are going to be any trades. Mondays are usually slow until we have at least 24 hours of market activity to look at. But every now and then we have a good early Monday, and we get into some really profitable trades early in the week. So we'll play that one by ear. Either way, I hope to see as many of you as possible tomorrow at noon. Thank you so much.
Thank you, Andres.
Very good, Andy.
Thanks. Talk to you soon.